morning. You're watching Ask Profit. I'm Smriti Chaudhary, and for the next 30 minutes, we'll take all your stock-related questions. Now, you can write to us on any of our social media channels or on the WhatsApp number that's flashing on your screen. You can also write to us on the YouTube live chat, and I'll be tracking that, and we'll take questions from there as well. Now, before we jump into the questions or even the focus for today, let's quickly look at where the markets are currently at. If you look at the benchmark indices, kind of a flat day today. It's absolutely flat as we speak. It's below 22,000 levels. Bit of a weak day in terms of, and this sort of weakness is a broad-based weakness. If you look at the range also in which Nifty 50 is trading, you'll see that it's a very range-bound day. And we started off lower, kind of went on in a little bit of green, and now we're back in red, but pretty flattish, so not a lot of complaints there. If you look at the sectors in trade, you have the likes of Nifty Auto that's pretty flat, but slightly in the green. FMCG also flattish, but in the green. We have Nifty Metal that's up about 0.4% as we speak. Among the losers, rest all are in red. However, the biggest loser in today's trade is Nifty Media. That's down about 2% in trade, and we'll talk about Nifty Media and what's dragging the index down as well in just a bit. But before that, let's look at the constituents also of the Nifty 50 and see what is there. You have the likes of RIL that's in green today, and we'll discuss that in a little bit of detail. We have the likes of Mahindra and Mahindra, Maruti, ICICI Bank, all in the green, while HDFC Bank, Axis Bank, Bajaj Auto, all in the red today. That's the idea. If you look at the broader markets as well, broader markets are also not doing too well today. In fact, if you look at the mid-cap index, it's down 0.5% as we speak. So there's a little bit more weakness on the broader end. Nifty small cap as well, down 0.8%. So clearly a lot more weakness on the broader end today in the markets, but overall a quiet day. However, there are couple of stocks that are buzzing today, and that's on the back of a big deal that that announcement came last night about the Disney RIL merger. But and because of that, we're seeing RIL in green today. It's come down from its highs and is up about 0.8% as we speak. However, if you look at TV18 and Network 18, they are in the red today, and they were down about close to 4%. Yeah, 5% now. TV18 down, and if we can pull up Network 18 as well, also down 5%. Now, let's talk a little bit about the merger. If you look at the valuation, the merger is pegged at about 70,000 crores on post-money basis. Obviously, this excludes the synergies that are going to come from the merger. But let's look at the valuations a little bit more closely and how it affects Reliance and how it affects Disney. If you look at the valuations, RL Media business is valued at close to 40,300 crores, while the investment by RIL into the media business is about 40,100. So that means there's not a lot of value accretion happening for RIL. If you look at Star India business, that's the Disney business that's going to merge, is valued at about 25,600 crore or $3.14 billion for the 36% stake that's going to have in the merger. If you look at the pre-COVID levels of Star India's valuation, they were extremely high at 1.2 lakh crores. That is close to about $14 to $15 billion. Now, Star kind of has been struggling in India for a while after it lost IPL rights, and that's a digital rights, and those are won by Viacom 18. And that's the valuation front that we're seeing. Shareholders, in terms of shareholding, of course, RIL and Viacom will have a major portion in the merger, and it will be led by Neeta Ambani, as announced last night. But on that note, let me introduce you to the guests for today and take it up with them, what they think about the merger. We have joining us Avinash Goraskshakar of Research Profitmart Securities, and Nilesh Jain of Centrum Broking joining in. Welcome, Avinash. Thanks for joining in on the show.
Yeah.
So we've spoken about the merger. We're seeing RIL kind of not too much of an increase there, but definitely in the green. And I remember it was 1% higher a couple of I think 30 minutes or so back. But TV18, Network 18, all down 5%. How are you taking this? And if people are holding these stocks, especially TV18 and Network 18, what would you suggest them to do with this?
Well, I think clearly, I think as mentioned by you, the contours of the merger are yet to play out. And I think, the market should obviously look at what kind of revenue scalability can come on the consolidated entity. My sense is that, valuations are one thing, but markets would obviously see how efficiently, the new management led by Reliance is going to scale up the business in the next 3 to 5 years. I think for the shareholders of Reliance, it's a very big opportunity because that actually adds a lot of muscle to their balance sheet. Obviously, they get a very good asset. So I think how they would be scaling up the opportunity in the next, say, 3 to 5 years is going to be a very key element. Just one day afterwards, whatever one may say, it's very difficult to pinpoint what is the kind of material impact, on a near term or a longer term basis. So I think we'll have to wait for some time. But yes, I think the direction is right. The merger is definitely going to add a lot of value to Reliance in the longer term. And I think as far as Network 18 and TV 18 are concerned, let me tell you one thing. These companies have never delivered in the last 3 to 4 years. If you see their financial performance, stock performance, they have always been underperformers. So I think the market should be looking at the prima facie front company that is Reliance, how Reliance can actually take this, this acquisition in a much better way. Because finally, in the consolidated entity, Reliance is going to now play a very important role. So I would believe that, you got to look at Reliance as a consolidated kind of entity. The smaller companies may not show any significant upside, but the parent company is definitely bound to benefit because Reliance has been clearly saying that they want to diversify into new business areas and come out of their traditional business areas to add a little bit of scalability to their business where margins are better and obviously where valuations in the future would get better.
All right. Thanks for the view, Avinash. Let me also welcome Nilesh Jain, who has joined us. Good morning, Nilesh, and thanks for joining in.
Good morning. Thank you for having me on your channel.
The pleasure is ours. Let's talk about the ITC, Nilesh. We have a viewer, Naveen, who wants to know if this is a good time to get into the stock. Would you suggest buying at these levels?
Right. So we have seen a good correction in this particular counter from the levels of 470, and it has formed somewhere around. It has found a good support somewhere around 400 levels. Now, from past couple of weeks now, it looks like it is forming a nice base in the range of 400 to 410. So I think, yes, it is giving a good opportunity to accumulate this particular counter at current level, provided it should not breach 400 levels on the lower side, which is acting as a double bottom sort of a pattern that can be seen on the daily time frame chart. So as long as manages to defend 400 mark on the lower side, we expect a pullback to continue towards 420 to 430 on immediate basis. And positionally, yes, it's a good portfolio stock, can be added and can be added in a staggered manner for a positional target of 450 to 460.
All right, understood. Next up, we have a question on State Bank of India. Avinash, this is for the longer term. We have Sachin Singhwar asking if he should invest into the stock from a 2 to 3 year perspective. There's some weakness in the last couple of days. Would you suggest that now that there's a little bit of a correction that has happened in the stock, this is an opportunity to enter the stock?
No, I think, as far as SBI is concerned, I think it was a great buy around 600 odd rupees. I believe, once the third quarter numbers came in, the market was not very happy with those numbers. But later on, when the management commentary came out and the market got a hint that a significant amount of re-rating could happen, the stock actually delivered a very good performance in a very short period of time. Now the stock is consolidating. And I think, my sense is that at these levels, if the investor enters, then he's got to take a view of at least 2 years plus. The bank has been doing admirably well on the asset quality side, on the loan book growth side, plus all their subsidiaries are doing well. So unless the investor has got a 2 year kind of plus kind of time frame, in the near term, the stock may remain, sideways. But yes, longer term, there's a lot of value which could be considered. But yes, the time frame needs to be at least 2 years plus if the investor needs to make an investment. In the short term, the stock would remain range bound.
Right. Avinash, continuing on this, talking about banking only, we have another question from Anil. They're talking about PNB and Central Bank. They've bought PNB at 70 and Central Bank at 48. This is for the longer term perspective. Would you suggest holding on to these two counters as well?
Yeah, I think, see, within the PSU pack, I think PNB has also made a very strong turnaround. My sense is that, numbers have been pretty solid, and I think the bank is making a conscious effort now to focus on core areas like housing finance, infrastructure. And I think these improvements have already got reflected in the Q3 for Punjab National Bank. So I think, yes, I think the buying price is pretty good. 70 rupees has been a good entry level price for the investor. So I think one should hold on. Here also, I would not be surprised that, with the new, once the new government comes in post the elections, infrastructure is going to be a key focus area. And that is where the larger banks like PNB would play a big role. As far as Central Bank is concerned, it's a smaller PSU bank, but yes, numbers have been pretty decent. And I think if the investor needs to give in a time frame of at least 12-15 months, he can continue to hold. We are positive on PSU banks, but yes, I think one should be a little patient here because the rise in most of the PSU stocks has been very significant in a very short period of time. So as of now, these stocks could remain in a consolidation kind of mode. Post the elections, I think one could see a kind of a re-rating again.
All right, got it. Next up, we have a question from Bhaskaran. They're talking about two counters, Infibeam and Ramco Cement. Both are on an uptick today. Infibeam is up about 4%, while Ramco is up over 8% as we speak. Nilesh, this is from a 6 months perspective. Since we're seeing an uptick in both the stocks today, would you suggest booking some profits?
Well, Smriti, first counter was Infibeam. I couldn't hear the second counter.
Ramco Cements.
Ramco Cement. Okay. So I believe this particular counter is trading somewhere around 832, and it looks like slightly flattish for the day. Yes. So Infibeam structure is looking strong. It has given a good consolidation breakout. It is a multi-year breakout candidate. The breakout came at 29 rupees. So positionally, from next 4 to 6 months point of view, this particular counter has a potential to move towards 40, 45 or maybe 50 rupees on the upside. So strict stop loss should be placed somewhere around 29 rupees. So that was the breakout level. So a trailing stop loss should be kept below 29 and one can stay put in Infibeam. On the other hand, Ramco Cement, today we have witnessed another leg on the lower side. This particular stock has underperformed within this particular space. So it looks like it is forming a rounding top sort of formation, looks slightly on a weaker note on immediate basis. Below 820, we might see further sell-off to continue towards 770 to 750. So not looking promising at current level, but a strict stop loss should be placed below 820 on the closing basis. Any pullback towards 870, 890 or maybe 900, that should be used as an exit opportunity. So within cement pack, the stock that we are liking is Ambuja Cement and Ultratech Cement. One can better think about switching the positions in these names.
Right. Apologies, I was looking at Ramco Systems, which is up 8%, while Ramco Cement is on a downturn. Actually, it's pretty much flattish there. Let's talk about the counter Vun Beverages. This one's from Rajesh Maheshwari. They've already bought in the shares at an average price of 690 rupees. This is from a medium to long-term perspective. Avinash, Vun Beverages as well, a pretty expensive stock there. But from here on, from a medium to long-term perspective, what do you see based on the fundamentals of the company?
No, I think Vun Beverages, is a company which is a prime bottler for Pepsi in India. And I think basically, if you look at the cold beverages market, I think they have been riding high on the volume sold by Pepsi. They have a pan-India presence. And I think, in India, for example, in a tropical market like India, I think the cold beverages market is definitely growing quite strongly. In fact, there have been launched many new products which have done very well. And my sense is that, this is a stock which one has to take a view of at least next 2 to 3 years. The entry price for the investor has been pretty solid. So I think he should continue to hold. These are franchises which are not going to happen and which are not going to be developed very soon by any other competitor that easily. So the business has got a significant amount of moat and the opportunity in India is pretty large. So I think if you have a 2 to 3 year kind of time frame, continue to ride this company. But as in the near term, valuations definitely seem to be fair expensive. So I think in the near term, the stock is just going to consolidate and move sideways.
All right, understood. Now we'll slip into a short break, but after the break, we'll take more of your questions and we'll start off with Sri Kishore Sharma. So stay tuned for that. We'll be back just in a bit. Welcome back. You're watching Ask Profit. Let's quickly dive into the questions. The first one, as we promised, is from Sri Kishore Sharma from Bihar. They're talking about IRFC. They've bought 7,000 shares at a price of 70 rupees. Now, this is from the longer term perspective. Power company Avinash brokerages do seem to be very positive on the sector from a longer term perspective. But on this specific counter, what would you suggest Mr. Sri Kishore to do with it?
I think already, if you look at the kind of price upside which has happened, the stock has almost doubled, from the time the investor has purchased. So my sense is that now at these levels, I think incremental upside is going to be a little bit slower, although longer term prospects are definitely quite promising for IRFC. But considering the fact that, IRFC is largely in the financing of railway capex to the extent of 40-50% of the railways, requirements every year, I would be quite conscious of the fact that unless you have a 2 to 3 year kind of time frame, this stock can obviously give good returns, but only in the longer term. In the short term, I think the stock has multiplied from almost 25-30 rupees to almost 140-150 odd rupees. So I think they should book out some profits off the table and obviously, retain the remaining stocks for the next, say, 2 years, which will probably give them a better risk reward. At the same time, they could encash their profits at the current odd levels.
All right. Next up, we have a question from Rakesh, and he's talking about Dynamatic Technologies. Now, Nilesh, this is from a shorter term perspective. They want a technical view. If there are any targets or any sort of levels that you should watch out for in this stock.
Right, Smriti. So this particular counter has been in an uptrend and constantly forming a high up and high bottom formation. Even on the weekly time frame chart, the structure looks very strong. provided if somebody wants to hold it for a longer term time frame, I think this stock has a potential to move towards 7,500 to 8,000 zone. On immediate basis, the structure looks slightly on a weaker note. It may test the levels of 6,700 to 6,600, but from a longer term point of view, one can stay put, keeping stop loss below 6,800, and a positional target comes somewhere around 7,500 to 7,800.
All right. Next up, we have a question on this one's from Vino from Chennai. Now, Avinash, this is for you. Now, they're not talking about any specific stock, but they want to pick 4 stocks and they want to invest into it on an SIP basis. They plan to invest 50K in total, 50,000 in total, and this from a long-term perspective, about 5 years. Are there any stock picks that you have?
No, I think, I would suggest that within the private banking space, something like an IDFC First Bank could be a good candidate for an SIP. This is one bank where I feel that over the longer term, a lot of value could get generated. The stock has consolidated at the current odd levels. But if one were to look at the next, say, 3 to 4 years, I'm pretty confident that the bank will be able to expand its balance sheet quite significantly. And most importantly, I think with a very solid, management bandwidth and the kind of opportunity in the MSME, SME space, this bank is definitely going to reward shareholders quite significantly. And the other stock, I would suggest that, if the investor has a 3-year horizon, then I think he could look at even large cap stocks like Mahindra and Mahindra. My sense is that M&M is well poised to do significantly well over the next, say, 2 to 3 years. They have a well diversified business model, very large in the SUV segment. Now they are going to make a very strong pitch in the electric vehicle segment. So I think here also a SIP approach could obviously help them if the investor has a time frame of at least 3 to 4 years. Use every market opportunity, a decline or a correction in the market to add to these shares in a very gradual manner. So I think I would be more comfortable on these 2 companies as of now. My sense is that rather than having 2 stocks for 50,000 rupees, it's always better to have a little bit of concentration on 2 good emerging, 2 good companies which could obviously generate a decent alpha over the next, say, 3 to 4 years.
All right, understood. Next up, we have a viewer from Greece, and they've bought in Sham Metallics at an average price of 450 rupees. Nilesh, would you suggest exiting the stock? Let's look at where the stock is trading today. If you can pull up Sham Metallics. Okay, we have it's up about over 1% in trade. Nilesh, would you suggest holding on to the stock from a shorter term perspective?
Right, Smriti. So we have seen a good amount of profit booking after hitting highs near about 730 odd levels. It has almost corrected 100 points from those levels now. After this correction, it is approaching its immediate support zone of 600. So yes, at current level, one can stay put, keeping stop loss below 600 on the closing basis. And I believe the time horizon that somebody is looking for slightly a short to medium term point of view, then probably we can expect a pullback to continue towards 680 to 700, and 600 should be the trailing stop loss, and one can stay put at current level.
All right, got it. Next up, we have a question from Naman Deora from Kolkata. Now, Avinash, they bought 2 stocks, Andhra Cements and Z Limited. Z at 260 and Andhra Cements at 127. They say they bought it from a trading perspective, but they have held on to it. And now they wish to kind of hold these 2 stocks for the longer term. Would you suggest that in both of these 2 counters?
No, I think, my sense is that from a fundamental perspective, I think cement companies should do well. But I think the choice for buying Andhra Cement, my sense is that I would presume that since it was a low price stock, the trading option was exercised. I think here, unless the investor has got at least a 12 to 18 month time frame, I would not be surprised that it would take a long time for Andhra Cement to actually generate a significant upside from the current odd levels. So I think if the investor can hold on for, say, 18 odd months, then I think he can definitely hold, because cement has started doing well, and we believe that infrastructure spending, once it starts, then cement is the first building block, which will obviously benefit all cement companies. But as far as Z Entertainment is concerned, I think there's a lot of controversy regarding the merger of Z with Sony, and I think now the merger being called off, there are some legal issues also which are being played out. So here I would suggest that at these levels, unless the investor has got a risk appetite of staying invested for the next couple of years, the investor seems to have made a very big loss here. So I think rather than booking a loss, just wait for the positive developments to come out. But clearly, I think a lot of investors have got stuck up in this counter, and I don't think in the very near term or in the short term you're going to see a big upside. So both the stocks, I think, if you have a time frame of 2 years plus only, then only one could hold on. Only then one could expect a decent risk reward. In the short term, I would not be surprised that both these companies would remain underperformers.
Right, and now there's a behemoth of a media entity to compete with as well. So that's a new development in the media space. But let's talk about SJVN. This is for you, Nilesh. This one's from Karthik from Hyderabad. What are the key levels that you should watch out for? I'm not sure if they've already bought in the stock. Nilesh, any key levels for SGVN that we should look out for?
Right. So if somebody is looking from a fresh entry point of view, then I would rather wait for further dip towards 105 or maybe below that, because the immediate structure looks slightly on a weaker note. We have already seen the stock hitting highs near about 165, and from those levels we have constantly witnessed a decline. So at current level, still I feel there could be a small dip which may open downside towards 110 to 105. Post then it can be bought keeping stop loss below 95, and then we can expect a pullback to continue towards 130 to 135. But at current level, I'm not that kind of convinced with the structure. I would rather wait for a breakout on the upside towards 128. Post then it can be bought.
All right, got it. Next up, we have a question from Sudarshan. They're talking about Vodafone Idea. We saw the company come out with a fundraise plan, but Avinash, the stock cracked yesterday. Now, if anyone's still invested, what would you suggest, and what do you see for the company from here on?
I think clearly, Vodafone India is one of the most weaker players in the entire telecom space if you compare it with Bharti or Jio. My sense is that this fundraising exercise has come in after a very long delay, and I think clearly what kind of money is going to be put in by the promoters, that is Vodafone and the Birla family. I think that is something which is very important. Clearly, the markets are not excited because even after this fundraising, the company will be on a weak note. Already 100 to 150 basis points of market share has been taken away by both Bharti as well as by Jio. I would not be surprised that at least for the next couple of quarters, considering the fact that 5G license payments are going to be scheduled for early 26, the cash flows are extremely weak. And unless the company starts generating good operating cash flows, the markets are not going to be excited. So I think it's better to, exit the stock on every, upside. It's a stock which I think you should exit because clearly in the near term, it would definitely remain weak.
All right, got it. Now, we're completely out of time on this edition of Ask Profit. Thank you so much, Avinash and Nilesh, for joining us and for answering so many questions for us. Viewers, thanks for tuning in. We'll be back tomorrow, same time, 11:30 a.m. But stay tuned to NDTV Profit. Lots more coming up.
Hello and welcome. This is Hot Money. I'm Agam Vakil. A quick look at how the markets are faring at this point in time. Flat